Hello everyone, today's video is all about company cars and traps for the unwary around company car tax, benefit in kind. So if a company owns a car and it is used by an employee, then there's a benefit in kind charge for that. Use of a company asset, benefit in kind charge meaning that there is income tax to pay for the individual using the company car. All standard practice, been around for decades. I think a lot of people are familiar with that. But what I want to tell you about today was a recent court case where husband and wife got caught out by this, where you would think intuitively they should not have been caught out by the company tax rules and that the company car tax rules should not have applied. But unfortunately for them, they did. So let me explain. So this was, like I said, a husband and wife company. And two individuals in business together, and they had the business of car leasing. Okay, so they also had a couple of exotic cars on the books of the business, so a Lamborghini and a Ferrari. Now, these two expensive sports cars were used principally for investment purposes and also for the odd bit of business promotional activity. Now, most of the time, these exotic cars were not on the road. In fact, there was a Sawn. What does it stand for again? It's the Statutory Off-Road Notification form that you file with a DVLA to say your car is not going to be on the road. So they'd file these Sawns with the DVLA, and the cars were in the garage on display at the back of the showroom, and that's what they did. Occasionally they would take them out for business promotional purposes, drive them around maybe with a logo or something, or some sort of event with a celeb driving one. They were never used privately, and when they did use them for business purposes, for that reason, for the promotional work, they would pay the vehicle excise duty on them, and then they would fill in another Sawn and get them officially off-roaded. So what happened was HMRC said these are company cars and they are available to the employees, so there is a benefit in kind. And the husband and wife were like, what? How can that even be possible? We've just told you that, that's nonsense. We don't use them privately, never have done. They spend most of the time just sat in the back of the showroom, collecting a bit of dust, looking good, and we might have to polish them now and again. But essentially, we don't. How can you say that they are used by the staff, i.e., the husband and wife, the two of us? So now we've got to delve into the technical arguments of what HMRC said. So, car benefit tax charge arises when a car is made available to an employee. Directors, obviously employees. Made available is the crucial part of the legislation. Not is it actually used by them, is it made available? Okay, and HMRC said, yes, it was made available. So then we look deeper into the law around this. And HMRC says that if something is unavailable, so let's have a look at what makes something unavailable. Well, two things. First of all, is the car physically incapable of being used? So is it broken down, or it's knackered, or it's kaput, there's something wrong with the engine, it doesn't work? That ticks the box for not being available or unavailable. That's the first one. The second one is it's impossible for the employee to gain access to the car because of restrictions imposed of them by the employer. So the employee can't force their employer to say, give me the keys to the company car. So they are the two things that warrant a car unavailable. Now, in the husband and wife company, neither of those happened because there was nothing wrong with the sports cars. So they don't satisfy the first strand of the test that the car doesn't work. And the husband and wife could always gain access to the keys to the car because they're the only two, that in question here that could have driven the car. So both of those strands, those tests in law, they failed, and HMRC further they expressly say in their rules, they say, in their view, a car does not count as unavailable simply because there is no current road tax or MOT or car insurance. So on the face of it, whilst it may seem a bit harsh, you say, well, hang on, the car was not used ever by the husband and wife, director, employees of their own company. It doesn't matter. It was still technically made available to them, and that's what triggers company car tax. This made available principle, not if they actually used it or not. HMRC didn't challenge the fact that they never used it. They said, well, it doesn't matter if you never used it. Okay, well, even we would believe you that you didn't use it, but technically it was made available by the definition in law of what does made available mean. And like I said, it was capable of being driven, and the husband and wife could get access to the keys anytime they want. So they have to pay the company car tax on that, the benefit in kind, the employer's class 1, which is pretty tasty for a couple of sports cars. So just bear that in mind. Something to think of for company car tax. Not always that straightforward, but it all hinges on that concept of availability. What is made available, even if you don't actually use it for personal use. So just an interesting recent court case there in the tax tribunals surrounding car benefits in kind. Hopefully you liked that video, and if you did, please do remember to subscribe there, and I will see you soon.